Good afternoon, everyone. My name is Sriram from the Commodity Research Desk at Reliance Securities. Welcome to the weekly commodity market updates. So, as usual, we'll begin with gold. Gold and silver prices, in fact, remained under pressure this week, with silver underperforming gold this week. Investors moved to cut the risk following a downgrade to the US debt rating, as investors preferred the dollar over bullion. The dollar also moved sharply higher amid fresh worries over the health of the US banking sector. Moody Investor Services downgraded its rating on debt of 10 US banks and changed its outlook to negative for another 11 banks this week. Additionally, the gold prices also came under pressure this week from fund liquidation, and after long gold holdings in the ETFs fell to a 3-year low last week. So, gold and silver prices remained under pressure this week. Looking ahead for the coming week or so, the key trigger will be tomorrow's US CPI number. Again, rising inflation numbers will be a positive step for the dollar. A positive will be positive for the dollar and negative for gold, as investors will ramp up bets that the Fed will continue its rate hikes going forward to curb high inflation. However, after the CPI numbers, market could face headwinds due to the worsening market sentiment over the past week or so, and this will continue to push investors towards the dollar, the safe haven appeal of the dollar, and which will reduce demand for gold going forward. So, any uptick can be met with some fresh selling going forward. On the charts, we feel MCX Gold October can remain within 59,100 to 59,700 this week, while internationally we see a range of 1935 on the lower side to 1975 on the upside of things. Moving to crude, both domestic and international futures continue to gain this week as supply concerns outweighed lack of demand from one of the top importers, China. Of course, the OPEC JMM panel, which met last week, kept its policy unchanged against the backdrop of stronger oil markets. Additionally, the committee made no changes after Saudi's pledge to extend its voluntary production by another 1 million barrels into September. That also helped the oil prices. But upside was capped after data from American Petroleum Institute showed that US inventories of US crude oil inventories rose by about 4.1 million barrels, while gasoline supplies witnessed a small draw. But all eyes will shift to the important weekly inventories, which is scheduled tonight. In a monthly report yesterday, also from EIA, the Energy Information Administration from the US, they released their monthly report, and it projected that the crude oil production is expected to rise by 850,000 barrels per day to a record high of 12.76 million barrels per day in 2023, overtaking the last peak of 12.3 projected in 2019. This also kept some upside limited for oil, but overall oil continued to remain showed some more uptick, and we feel that the supply concerns going forward will be the key trigger for the markets. So coming ahead, again, prices could continue to gain further amid renewed commitment over the Saudi production cuts and optimism over the weekly US petroleum balance. The EIA numbers on inventory is a key trigger expected to be released tonight and will move the markets. Monthly reports from OPEC and the International Energy Agency, which is a Paris-based agency, will also be released this week, and that could also have a small trigger on the market. So, pretty busy calendar week for US for the crude oil prices. Of course, the US CPI number could also have an indirect impact, as a higher inflation number will push the dollar higher and will keep the crude oil prices upside limited. But we feel that overall supply-demand mismatch, current supply-demand mismatch in the markets will continue to push prices higher. On the charts, we feel NYMEX WTI key hurdle is at 83.50, and a break above this 83.50 will push prices as high as $90 in the coming week or so. And on the downside, we feel key support is remaining at $80. On the domestic side of things, we see MCX August hurdle at 6,900, and a break above will push prices as high as 72.50. But if not, markets could move back to the supports of 6,600 if the data is not favorable going forward. Briefly on natural gas, prices internationally and domestically witnessed a jump this week on the back of rising demand, as weather in the US remained extremely hot. Looking ahead for the coming week, we see that the hot weather conditions will continue to persist going forward at least till the weekend of August 20th, as projected by several meteorologists in the US, and that could continue to push prices higher in the coming week for domestic and international gases. The only hurdle will be lack of any demand for the markets at current levels. The charts suggest that markets can move higher, possibly test 245, 250 levels on the domestic side of things. On the lower side, we feel 200 to 205 will remain the key support ranges for the MCX August contract in the coming week or so. Finally, on the copper side of things, both domestic and international prices eased further this week on the back of weak numbers from China. China's imports and exports fell faster, much faster than expected in July, threatening growth prospect in the economy and increasing pressure for the government to provide fresh stimulus going forward. Imports of unwrought copper also fell by about almost 3% year on year, reflecting weak demand for the market. So we see, and additionally we also saw the dollar having an impact on the market. So overall we saw most other base metals also remaining under pressure on the back of that. Looking ahead in the coming week or so, we see the key trigger, like the precious metals, will be the US CPI number. Early this morning, inflation data from China was mixed. CPI on a monthly basis unexpectedly rose, but the PPI number fell year on year to 4.4%, the lowest since December 2021, February 2021, and that reflects extremely weak demand from the Chinese side of things, and that continues to remain the key hurdle for the markets. Investors will be looking forward. I feel that investors will be looking at the US CPI number and new loans data from the Chinese side of things this week. And ahead of that, we see markets remaining range bound, but with a slightly negative bias. A stronger dollar will also weigh on sentiment. So overall, weak or negative momentum is a possibility for most base metals. On the charts, we feel that 715 remains a key support for MCX copper, and on the upside, we feel 745, 750 levels will be a key hurdle for the markets to look out for this week. So that's it from our side. Thank you very much for watching. Have a pleasant day and a week ahead. Thank you.